The currency that everyone will be watching tomorrow is going to be the British pound. And the reason for that is because, first off, sterling is coming off its 5-month highs. Had a very nice recovery towards the end of October, thanks to the fact that a no-deal Brexit risk has pretty much abated. And now we're walking into the Bank of England's monetary policy announcement. The Bank of England is not expected to change interest rates. They've actually kept policy unchanged for most of this year, but there will be a quarterly inflation report released alongside the rate decision. So even though no changes are expected, we could still see some type of response in the British pound. So basically what we're looking for is, first of all, whether or not there's any dissents in the policy vote to keep rates unchanged. For the most part, I think it's going to be a 9-0 unanimous decision. However, there are 2 members of the Monetary Policy Committee that have basically been a bit more dovish, a bit more cautious than their peers. So if we get 1 or even 2 dissents in favor of an immediate rate cut, we will see a sharp sell-off in the British pound. Now, of course, if it's a 9-0 vote, then in favor of keeping rates unchanged, then that'll probably lead up to a focus on the quarterly report and their economic projections rather than the rate decision themselves. So with the quarterly inflation report, the Bank of England typically provides their updated forecasts on growth as well as inflation. In general, growth has been subdued, which is no surprise because even if the UK kind of leaves the European Union on a relatively smooth basis and there's minimal disruption in the markets as well as the economy, we're still looking at a lot of uncertainty for investment, and that has already led to a decrease in activity in the service sector and the economy as a whole. It has also led to more restrained consumer spending, so all of that could lead to weaker growth forecasts for the Bank of England. Inflationary pressures still remain well below 2%, the Bank of England's CPI target, so they could lower their inflation forecast because it seems that globally there's been a trend of lower inflationary pressures. So we do get a lower inflation as well as GDP forecast from the Bank of England. That's going to resonate strongly for the British pound. So the bottom line is there's more downside than upside risk for sterling going into this monetary policy announcement. And this will single-handedly be the biggest event risk for the British pound this week.